Crypto industry has muscled its way into the mainstream, but is it safe for your portfolio? Welcome to Inside ETFs, and we're talking about crypto. Equity funds have been bleeding cash for years, losing out to cheaper and often better performing alternatives. Meanwhile, some are now finding an unlikely lifeline in crypto. Bitcoin's beefed up returns and provided some with an outsized bump. But the crypto industry can escape its unpredictable reputation, and you may not want to expose your money to its brutal drawdowns. David Nicholas, CEO of XFUNDs, doesn't agree and believes there's continued upside momentum for the sector. So David, crypto is often labelled as a high-risk, high-reward option. How are you combating the risks with your fund?
Yeah, that's right. I mean, obviously, we've seen the adoption of crypto over the last couple of years. I really think that crypto has become more mainstream, and with that, we've seen volatility come down. But one of the things that we've done in our blocks ETF is really try to give a broad, diversified approach to crypto. So about half of the fund has direct exposure to Bitcoin and Ethereum ETFs. So you get that direct crypto exposure. But again, like the Warren Buffett model, right? Warren Buffett was so against Bitcoin. Why? Because there was no real earnings or revenue growth. So we pair the fund. We have about 11 to 12 publicly traded companies that we consider crypto industry companies that have real earnings, that have real revenues, but they benefit as the price of crypto goes higher. So again, for investors, you compare direct crypto ownership with companies that actually have earnings, so you get the whole ecosystem as a whole in one fund.
Well, we'll talk about those crypto companies shortly, but recent legislation has been favourable for crypto, but 4 years is a short time. Is the current promising environment going to last for the long term?
I think it will. And some of this is you just follow where the money's going. So if you just saw during the current election under President Trump, right, the super PAC money that came from the crypto industry was pretty significant. Almost $200 million was raised in a pretty short period of time. That money's coming in. So I think when you look at elections going forward, even when Trump is no longer president, I think this crypto industry as a whole, the amount of money that's there will continue to fund elections and really make sure that there are pro-crypto candidates in office, regardless of party. So I think the money's there, and I think you'll continue to see this beyond just the last election cycle.
You mentioned gains in Ethereum as well. It's rallied to its highest level in nearly 4 years in the past week. How do you differentiate between the fad coins and sustainable investments?
Yeah, and there's so many of these fad coins, as you put it, that have really popped up, and you see some retail adoption of these. But for us as investors, we want what's going to have real long-term staying power. And I think this comes down to use case. So if you take a name like Ethereum, we've seen Ether rally over the last month and a half. And I think that has a lot to do with what is the real use case of Ether. And it's broad, right? When you just see stable coin adoption becoming more and more, you've got a platform like Ethereum that could really build smart contracts, or help build stable coins. That has a use case that I think has a long runway and has real legs. So I think investors need to differentiate versus, is this just hype and you've got retail investors piling for a moment, or is there a real infrastructure at play that can be used in a long-term base case? Ethereum fits that for us, which is why we also have exposure to it in our blocks ETF.
Your fund is also tied to Coinbase, but its stock has plunged after disappointing results recently. In a competitive market, is it still the safest way to get crypto exposure?
Yeah, and this is why I think it's hard to go all in on one name, right? You've got names like Coinbase, you have names like Bitmine and other companies that have done really well. They've had moments where they've done well, but the volatility is so high. And so I always say you don't want to live and die by one of these crypto names. So for example, Coinbase, like you mentioned, yeah, we still like Coinbase. It's a 4% weighting in our fund. So again, Coinbase selling off a little bit after earnings is not going to derail the overall fund price, which is why we believe if you take a broad approach, own names, they're going to be volatile. But by doing that, we're also selling puts on these positions so we can really pick up some of these stocks much lower if they continue to decline.
Meanwhile, President Trump has opened crypto industries to trillions of dollars and new investments from retirement savers. But is there meaningful demand for this?
Yeah, so our private wealth practice is generally geared towards retirees. So the majority of our clients are, I would say, 60 and older. And it's funny, you'd think it'd be the 20-year-olds asking about crypto. It's my 60-year-old age clients that are asking about crypto. So I think the retirement market is a 20 trillion market here in the US. I think it's an untapped market that when 401k and retirement plans have the ability to have access, which they're about to crypto, that could be the next leg up. But we've got to do it in a diversified way, which is why, again, we think a fund like Blocks, there's a lot of great funds out there, but we think a diversified way is really the best way to not get burned inside of retirement accounts.
So finally, using stablecoins to exchange one fiat currency for another incurs as many same costs as a normal conversion. Are claims of their use and low cost overblown?
I don't think they're overblown, but I do think the moment is right for stable coins. And if you just look at here domestically, the US dollar, right? We've had some pressure on the US dollar. We don't really see that abating anytime soon. So you have investors really not just in the US, but globally, where's a safe store of value that I'm not going to have inflation eat away the value of our savings or of our dollar. So I think stable coins are, regardless of the cost in the short term, I think the use case again for them, the track record is the track for them is very promising. And I think if the dollar declines continue, you're going to continue to see stable coins, I think, really become popular over time.
That was Nicholas from XFUNDs. Don't forget, you can watch more videos on Reuters.com.